Hello everyone. Welcome back to the artoftrading.net video here. I just want to do a quick video for you guys with about a trade that we did here at the Art of Trading. I just want to kind of walk through like the mechanics of the trade and why we took this short position in an oil stock by the symbol EXXI. Just very quickly, guys. Just wanted to just kind of touch on this issue, which I know is a very important issue in my opinion. Is right now February 2011. We're seeing this market just continue to rip higher. Every dip literally is being bought. It seems like corrections that many people expect. It seems like they happen intraday. You see like these little pullbacks intraday, and then the market just rallies back and keeps closing well. It's been doing that for weeks now. Pullbacks, don't last more than like a few days, or 2, 3, 4 days, and then the market comes roaring back. This is a momentum market. Very, very hard to fight a trend like this. It really is. A lot of people try to short, trying to short this, and nothing wrong with shorting. Obviously, I'm about to talk about a short trade that we did here. But just remember, you're shorting on borrowed time. It's only, weakness only lasts for so long before new buyers come in. So just remember, you're shorting, you're fighting a very strong trend, and you're fighting on borrowed time. Okay, so let's just get to the charts here, and let's talk about this trade which I took yesterday at the artoftrading.net here, and a trade that I issued to my subscribers as well too. So first of all, I just want to talk about what caught my eye in this short that we did in EXXI. First of all, I just want to it was more than a formation this time. I usually talk about formations, like bull, for example, like here's a formation that I would typically trade. Maybe something that looks like this, maybe a breakout, from an ascending triangle here. But this is not this short position I took. It was nothing like that. It was more of a candle formation that I saw, and I used the Bollinger Band. Bollinger Band is something I don't really use that often, but every now and then, it might be useful as a tool. I used it yesterday, and thankfully it worked. But it's not a tool I use very often here. But as you can see here, this is the OIH, which is the oil services holders. And as you can see here, the stock has made a good run from 145 all the way up to almost 160, today, before it reversed. Look at that. See that? This little candle right here. This could be seen as an upside down hammer formation, inverted hammer, whatever they call them. For me, the names of the candle doesn't really matter. All I need to know is this a reversal candle, and if so, where is the all I care about is this a reversal candle, and the location of the reversal. So you take a look at this, a reversal candle where the stock opens here higher slightly, rallies, and then gave back almost all of its gains, and then giving you almost like an upside down, formation, like a candle looks like this, telling you that buyers basically ran out of strength, and now the stock looks a little bit tired here. So this is what I saw in OIH. So right away, I'm looking around in different sectors, in the oil sectors, and I found this one. Okay, EXXI. So here's what I saw in EXXI. So remember the reversal candle we saw in OIH. That was the candle that we saw heading into the close. With maybe about 30 minutes left in the day, maybe 20 minutes left in the day. And as you can see here, EXXI had pretty much the same exact candle. Look at that. See this? This little inverted hammer type formation right here. Looks like a little cross, like kind of a cross upside down. So that tells you that, hey, buyers might be getting a little bit tired here, and maybe the stock could drop, just a little bit from here. But more importantly, more than the actual candle, I used also a confirming pattern here. I wanted to see what EXXI was doing in relative to the Bollinger Bands. So you can see here, the stock, every time the stock has made a run and exceeded the Bollinger Band, like where it gapped up above it, or it overshot outside the Bollinger Bands, you can see how that always was a short-term top for the stock, or at least indicate at least short-term weakness. was coming, because I mean that just shows you that, hey, the stock is very overbought now, and now we need to expect like some kind of a pullback. Maybe it could be, who knows how long it lasts, but we need to expect some kind of a pullback, or at least the risk reward has now shifted, to maybe like the short side. So you can see here the stock, first of all, it overshot here the Bollinger Band on this candle right here. So right away it tells you that, hey, the stock is entering in a potentially overbought or danger zone, or like overbought. But then it kept running. Look at that. So shorting here alone would have been a very bad strategy. You don't want to short just because a stock goes outside the Bollinger Bands. That's not wise. You want to look for confirmations. I use the confirmations of the OIH, where I saw a similar candle to this, and not only that, I also used the Bollinger Band as my confirmation, where I saw, hey, the stock has been up several days in a row. 3 of these days were outside the Bollinger Band. That tells me, hey, the stock is a little bit overbought here, so we need to expect, just a little pullback at least. So I saw this candle. So this candle here broke out. This candle here continued to run. This candle here gapped up, but look at that. It started to get a little bit tired. Look at that upside down hammer right here. So right when I saw that, the first thing I did was zoom in to the 5-minute charts, just like I always do with all my trades. The minute I look at a daily, I see something I like on the daily chart, right away my first instinct is to zoom in to the 5-minute chart and try to pinpoint a good location to enter a trade and set stop losses, and so I can enter at a good risk reward. So when the stock caught my attention, the stock was about right here. This was it right here, right into the close. See, look at that. This was February 7th. We're talking right into the close, right here at 31.95. That's where it caught my attention. So right away, I'm thinking, okay, the stock, it's ran up all day, and now towards the end, it's kind of giving up these gains. Look at that. So it's slowly dwindling lower towards the close. So boom, right here, enter short positions right here. Send out the alert to my subscribers, okay, which looks like this. So short EXXI at 31.95, stop at 32.40, and I want to swing trade this one. Okay, and here's what I wrote quickly. This one is starting to put in a topping candle, also seeing signs that the market is getting a little bit tired here. So going short EXXI for an overnight hold. Okay, so boom, right away. Now once the subscriber, I got the subscribers, enter the short positions right around here, that 31.90, 31.95 area. So as you can see, this was going to be my stop loss at the high of the day. Just the high of the day was 31.40, 32.40, 32.37 was the high of the day. My stop loss was 32.40, so just a few pennies above. That should be more than enough. Aggressive traders, you can maybe use this as a stop loss, or maybe even this as a stop loss if you really want to keep a tight leash on it. Try to use those pivot highs intraday as your stop losses. So right away the stock starts to fall a little bit here, so it looked good right away. So we entered at 31.95. It dropped a little bit. You feel good already. You're like, okay, this trade's starting to work right away. I love trades that work right away. It tells you that it validates your analysis. It validates the direction of the trade right away. So you feel right away you have a cushion already to walk into a trade as a swing trade. You have it locked in already when the trade starts to work right away. So this is exactly what you want to see really in most of your trades if you're trading momentum. But as you can see, the stock went back a little bit higher, but always remained more or less near our entry. So that was no big deal. So that's where it closed. So then to the following day, we decided to take this as a swing trade. The stock, look at that, it gapped lower. See, it gapped down right here. So it gapped down right here, quickly filled the gap, and then immediately continued to sell off. See that? But right away, guys, remember, you are fighting a trend. When you short a stock in a momentum bull market, you are fighting the trend. You do not want to overstay your welcome in short positions. So right away, I covered the shorts, alerted subscribers to cover their shorts as well. So I covered we shorted here at 41.95. We covered our short around 31.40, 31.30. Literally right near, almost, we got lucky right near the lows of the day. And as you can see, guys, just like I said, you do not want to overstay your welcome in a short position in a bull market. Right when we covered it, I sent the alert to subscribers as well. For this one too, I send both entries and exits to subscribers as well too. So I cover EXXI at 31.40, covering the short and taking the tiny gain and moving on. Shorting in a market that keeps rising is rarely a good idea.
So take small gains from shorts quickly. Don't cannot be greedy. Okay, and so you guys get the message. If this was a bear market where markets keep tanking, I would have entered the short and I would have stayed in the short for as long as I possibly can and try to milk as much as I can out of it. But in a bull market, you're shorting on borrowed time. Time is ticking against you when you are short. So just remember that. All right, guys, and don't forget, take your profits. You can never get hurt taking profits. Even if you leave money on the table, it doesn't matter. You're at least making money. You're at least booking profits. There's nothing wrong with that. All right, guys, best of luck to you tomorrow, and I promise I'll make more videos in the future. Good luck.